Hello, this is Will from Will to Trade. You can check me out at www.willtotrade.com. Fill out the form, get invited for a free trial to our chat room. We chat every day, Monday through Friday, talk about stocks starting as early as 9 a.m. Eastern Time until all day long. Today is June 8th, 2016, middle of the week, Wednesday. Making a video here late night on a really amazing runner, BSPM. Not even really sure why this ran today. I personally couldn't find any news on it. Again, I personally come more from a technical point of view than a fundamental point of view. It's possible there could be some hidden news on this thing that I just haven't fully researched. Hey, if you find some news, let me know. But what I'm going to talk about is more on the technical side. What this stock did, what incredible moves this stock made, kind of a little bit of a sense of why it made some of the moves or how it was able to make these moves, where I found it, where I alerted it, and then I want to illustrate with a whole bunch of lines on the chart what I would consider to be safe entries. This video kind of piggybacks on a video that I made yesterday on HMNY. Made a video on that one because that was also a monster move, going from $1 to $15 in 2 days. This one didn't quite go as extreme, from like $1 to almost $6, but definitely made a huge move. Massive move. So the biggest reason why a stock like this can make such an incredible move is the float. According to my records, the float is like 1.77 million, which is tiny. If you are new to trading and you don't know what I'm talking about, if you don't know what float means, it's the amount of shares available to trade. Simple supply and demand. The more shares there are to trade, the slower a stock will move. The less shares there are to trade, or the smaller the float is, the bigger the volatility. The more the stock can move either up or down. Just really simply, think of float like either a golf ball or a bowling ball. A golf ball would be like a small ball with a small float. A bowling ball would be a big ball with a big float. And imagine your arm and you take the ball and you throw it, right? So if you throw a golf ball, you can throw it way further than you could throw a bowling ball. I know it's kind of obvious common sense, but I think when you think of it in that analogy, it does kind of make sense. It's just it's the same arm, it's the same force, it's the same intensity, but the strongest person in the world there's no way they're going to be able to throw a bowling ball as far or further than a golf ball. So similar here with stocks. The lower the float, the smaller the mass, the smaller the intensity, with big volume, with big activity, has the chance to propel a stock. Okay, so what we're looking at now is the daily chart here in the 1 minute view. Now, me personally, again, I toggle back and forth between 1 minute and 5 minute candles. I know there's some traders out there that love the 2 minute candles, and some traders might love 15 or 30 minute candles. I find value in both 1s and 5s. That's just me. So I go back and forth. The volume was huge. I mean, I think at least by the end of the day, the volume was like, 1,000 times relative volume. Again, I talk about stocks that have 100 times or more relative volume. I call those screamers. That's just my personal definition. So if you have a stock that goes 1,000 times relative volume, that's like a 10-fold screamer. It's massive. It's huge. It's just tons and tons of volume. But we want to try to be able to find these stocks to catch them before they really start taking off. So I'm going to show you where I saw it, kind of why I saw it, where I alerted it, and what's really happening. I caught it like right around here. I wanted to alert it right here, but as you can see, like this one candle, like it blinked and it just popped right up. We're going to talk about this move here, but let's zoom in. So we know what the stock did. You obviously saw it here a minute ago, but let's try to zoom in just a little bit and just almost pretend like we're looking at it fresh, as though we don't really know what it did. We know that it went to almost 6. So it made kind of a sporadic move. For my personal definition, this isn't that clean of a move. It's just the candles are kind of all over the place. You obviously could trade in this range up here, but I think it's just a little trickier, and I think it's a little more difficult to predict. And I think you might not necessarily know where's a safe entry, where's a safe exit. Obviously, in retrospect, we could say, well, hey, you could buy it at $1.50. Which would be I mean, really incredible if you somehow caught this minute 1 or minute 2 of the market open. I mean, that would be amazing. And then you bought it at $1.50, and then you could even say, oh, let's sell it at $2. Yeah, I mean, that's an incredible trade, first part of the morning. But it just doesn't really show enough cleanliness, really, I guess, for lack of a better word, in the visual appearance of the chart to warrant at least me to be interested in it in this half hour, 40 minutes or so. Okay, but what did it do? It does the same thing that these stocks do over and over and over. The patterns may be slightly different, but the concept is the same over and over and over. It goes up, and then it pulls back, and then it consolidates, and then it breaks the previous high of day. Here's that previous high of day at 216. And this consolidation, although it may not seem like it, is a very bullish move. I know it doesn't look like it, right? It's like, oh, okay, it's coming down, and this is a very sporadic candle. This is like itty bitty volume. This is a really tiny little candle. There's like almost like no volume here. I know it's counterintuitive, but you just have to believe me. This move is really bullish. I know it sounds strange, but it is. So when I first saw this, I saw this right around here, or maybe even a minute prior, like right around here or so. And I was thinking this line here, like 210, and I was about to alert it in the room. I was about to type it, and look what happened. Like I blinked, and next thing I know, it goes from 210 to 230. So I'm thinking, wow, okay, well, I just literally couldn't type fast enough. It already shot up to 230. And again, now that we're looking at it minute by minute, there's nothing in this particular view that really can tell us, hey, this is going to triple, from $2 to $6. It's going to triple. So you don't know that, right? You don't know that going into it. So, again, there's many ways to trade this. Like I already told you, you could trade from $1.50 to $2. It's kind of a challenging trade. You'd have to be a real, future seer in a way, a real wizard to be able to predict that trade. Another trade you could make is to say, hey, let's buy it at, $2.10 or $2, right around here. And then we'll just sell it at $6 or almost $6. I think you would have to be even more of a future seeker to really be able to predict that, because there's nothing here to tell you. There's either no news, or whatever news there's out is really not that exciting to really show it's going to triple. So what I want to illustrate in these next 4 or 5 opportunities is how to scalp this trade, not knowing what it's going to do, but knowing that we want to jump in, jump out quickly, and then wait to see if there's a next opportunity. In my last video, I talked about the apex point. I'm going to talk about the apex point in this video. I'm going to talk about some dip buying as well in this video. And I also made other videos on creating advanced orders. And I'm telling you, you have to be able to trade this with advanced orders. I'll say it again. You have to be able to use advanced orders to trade this. If you don't use advanced orders, you will get lost, you will lose money, you will get frustrated, and you'll honestly lose faith. Okay, so, pardon me, right here at this yellow arrow, right here at this yellow arrow, I alerted at 2:30. Even though I felt I was a little bit late from the 210 to the 230 move, which is already almost a 10% move, I felt there was at least one more pop. At least one more. How many more? I don't know. But at least one more pop. So I alerted 230, and I think I was saying like, 250 or 255 to 265, right? Ultimately 265. So if we fast forward to the next candle and then one more candle, you'll see it does it right there. So again, to me, this is what I consider like a really great trade, because it happens quickly, right? If you buy in here and then you sell there, it doesn't really pull back and then go up. It just like automatically shoots right up. These kind of trades are not something you're going to find every day. If you buy it here, you have to wait, and you may lose faith. If you buy it here, where it's like, okay, it goes up, it pulls back, and then, okay, well, yeah, I see the beginning of something. You have to wait out this whole time period, which is like a 20-minute time period. You'd have to really have faith that the stock is going to do something. And somewhere around here, you might lose interest. Certainly by here, you might lose interest. But by buying either right there or even right there at the break of the high of day, or even slightly above, or in this case, definitely above with confirmation, we're buying in the upward move. So from here to there is the actual alert that I gave. And then I kind of put it to the room. Like, okay, here it is. BSPM. You guys don't need me to hold your hand. You can make your own trade on this. Take what you've learned and go ahead and make some trades. So right around here, it went into a halt. Now watch this candles as though you were watching the stock for the first time. It's in a halt and it's going to open. We don't know where, right? This trying to buy when it comes out of the halt is very, very challenging. I would say probably one of the most challenging ways to trade, because you don't know where it's going to open. You don't know what it's going to do. You don't know if it's going to squeeze up 10, 20%, or if it's only going to squeeze up 5%, or if it's going to open lower or higher. You just have no idea, right? So look at this candle here, and let's see if we can actually zoom in a little bit. All right, great. So you could trade within this one candle. But again, there's only two ways you could trade within this candle. You would either have to have direct access ordering, where you jump in, jump out, like instantly, or you would have to place the entire order ahead of time, again, with the advanced orders that I had talked about. So look at this. It was a high of 269, and then it opened at a low of 289, like a 20-cent spread. So you don't really, how you gonna know that, right? So you could buy it $3 and then say, well, I'll sell it, for 10% more, but it doesn't go up 10%. It goes to 324. I guess you could, be more conservative and say, I'll buy it at $3 and sell it at $3.15 and grab 5% there. But I think you're getting the point. Trading at this moment, it's really risky. So I don't recommend it. I don't recommend trading right out of the halt unless you're a real pro and you really know what you're doing. Okay, so what we'd want to do in these next couple candles is just watch it, right? So we're watching it there. And again, imagine we bought it at $3 and we didn't even have a place to sell it yet. We bought it at $3 and we figured, okay, let's put a stop, at like 280. That's a 20-cent stop. We would have already been stopped out, the second candle. And then we would get frustrated and discouraged. Like, well, what's going on? I just got stopped out, because you're not buying at the right time. It's not just the right stock, because this is the right stock today, June 8th. This is the right stock. But buying at this candle or trying to get into this candle, it's not the right time. So you want to buy at the right time, and that's what this video is going to continue to illustrate. So we see it again, it pulls back, and one more time, and then look at that. Imagine even if you bought in there at 280 and you had a 270 or 265 was your stop, you're really going to get stopped out. And the next candle, I think, drops to like 260. If you weren't stopped out before, you'd be stopped out now. And then this candle. So watching this move, okay, you have some choices. You could buy anywhere in here as a dip buy, and then buying on the dips is not necessarily a wrong thing. There's a lot of dip buyers out there that love to buy on the dips and buy on the pullbacks. But what I prefer to buy, if I can, is on the upward move past that point of resistance. And again, that's what we call the apex point. So here we would be thinking, okay, well, where's that line of resistance? Now, I had it at $3, and one of our members actually was looking to trade it at $3 from 3 to 330. This dotted blue line is 330, and our member was correct. You could argue that this line here, like the 310 line, is breaking through resistance, and it could be an apex because it's the top of the stem, and that's certainly an option. Again, these points of support and resistance can be slightly subjective. You could have different traders have different ideas where they would be, and even the same trader may have a range. Like, well, 3 to 310, it's kind of like a resistance area. But breaking whole dollars is a pretty safe bet. So let's take a look at this here and see what happens from the 3 to 330. So you look at that, it pulls back. There's my arrow signifying a second trade opportunity. Remember, this is our first trade opportunity in like 2 or 3 candles. See how quick that was? And here's our second trade opportunity. And this happens in the same candle. I don't know how many videos I need to make about this. I don't know how many times I need to say this. you have to execute this with an advanced order. Look at this, because it happens in the same candle. You just are not going to be able to fill your order fast enough if you try to buy and try to sell within it. You have to place the entire order ahead of time. Buy stop 300, sell limit 330, or buy stop 300, sell limit plus 5 or plus 10%, because it moves so quick. You really need the computer to do everything for you. So one opportunity in 2 or 3 candles, a second opportunity in 1 candle. That's why we like to buy at the apex point, because it's quick. You're not sitting in this trade or in the stock a long time. So then it goes to another halt, right? This is like 2 halts here in half an hour or whatever. And then you have to say to yourself, well, where's the next break of resistance? Well, obviously anything above here is another break of resistance, because these were the previous highs of day. So we have whole dollars and we have half dollars. So this line here is at 350. So 350 by nature becomes another apex point, because it's higher than the previous high of day, and it's a half dollar break. Okay, so look at that. You could buy right there at 350, and coincidentally the base of the stem falls right almost exactly at 350. And then this dotted blue line is 385. This move right here is another 10%. The first one was 2 or 3 candles. The second one here is 1 candle. You have a halt, and then you have a trade that happens in 2 candles. It happens so fast. Again, you really need to place this entire order ahead of time. When you're in the halt, you need to place it. You need to think about, okay, we're going to break up, buy, stop 350, sell, limit 385, sit back, let the computer do the work for you. Okay, this gold line here is $4. Like I had a feeling when it was right around here, yeah, if we're breaking 3 that strong, we could hit to 4. I didn't think it was going to break way further than 4, so I was actually kind of surprised. This next line here is at 412. It represents another point of resistance, because it's the top of this stem of this candle. And notice what happens. The next one's a doji. Next one falls a little bit. The next one really falls, right? So we're not buying in these candles, although you certainly could. Again, there's dip buyers out there that love to buy there. But my personal logic, and again, look at that, how the base of the stem falls almost exactly at 350. I find that, again, fascinating. But my logic is, it ramped up so much. Could this be the end? Maybe it's going to come crashing down. It's already at 4 from like $1.20 or 30 or something. But we have to say, well, you know what? It's going to do one of 2 things. It's either going to pull all the way back, and if it does, we're not going to buy again, or somehow, some way, it's going to find its way through this point of resistance. It's at the 412 mark, and it's going to break through and find another apex point. So let's see what happens. It pulls back. Well, it pretty much does the same thing. And again, look at that. Look at that. So it's really fast. It's really, really fast. It breaks through right here at 412, and then this next dotted line is 453. That's a 10% move, again, in 1 candle. Look at that, 1 candle. Look at that, 1 candle. I just can't say it enough. You have to use advanced orders. You have to see it rip up, pull back for consolidation, even if it's only 4 minutes of consolidation, and break through another point of resistance. Your idea of resistance could be different. You could say, well, $4 is resistance, 4 even is a beautiful apex point. I'll buy at 4 and sell at 440. Okay, that's fine. You could say this line right here, like the 412. I'll buy at 412 and then sell at 453. Okay, that's fine. Or you may say, you know what? I want to see a break of the high of day. We'll buy it at 420 and then we'll sell it, plus another 10%. All right, so let's see what happens. The next move, it kind of maintains. It pushes some more. And I think this becomes another, was it 490? Yeah, this becomes another point of resistance, giving us another apex. So we don't buy yet because we have to wait, right? It pushes up, we draw our line, and we wait. And it's a good thing we wait, because if you look over here, it really consolidates for a while, and then it pulls back. Okay, remember our line here is 490. Is it going to do it? Is it going to break through? Well, it's not yet, so we wouldn't buy, 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 490, and then boom. And again, this dotted blue line is where we would sell 10% up. So you buy here and sell there what is this, like the third or fourth time where all the action happens in the same candle, you have to use advanced orders, because you're just not going to be able to execute this fast enough. Look how huge this volume bar is. Is that a coincidence? I think not. And I'll zoom out and I'll show you what this looks like on the bigger picture. So you buy here and you sell here, or you sell there, or you sell there. It actually happens in this first candle here, and that's pretty much it, right? Like, it eventually squeezes a little bit more to the full high a day at the 598, but there's no more safe entries. So let's zoom out and just kind of see what this looks like, so you understand the big picture. Okay, yeah, right to here. So we started here, and we're going to kind of finish here, and then I'll be wrapping up this video shortly because it's already a 20-minute video. A lot of stuff to talk about. Starts really small here in the $1.50, $2 range. Not trading it there. Too risky, too unsure, too unstable. Not really clean. Not trading here, but this is surprisingly bullish. You would think this is bullish. No, this is the reaction to this. Again, just trust me. This is a bullish move. And when I saw this move, I said, let's buy it. I wanted to buy it here, but I ended up buying here. This was like a 15% move, and then it gets halted, and then it goes up. You wait, it pulls back 3 to 3:30, boom, in one candle. Again, these are 1-minute candles. It gets halted. You can't see it, but there's your arrow, and there's your another 10% move right there. It squeezes up, it pulls back, again in the same 1-minute candle. How many times does this happen? This happens once, twice, at least 3 times, right? Or maybe 4. Yeah, once, twice, 3. Yeah, 4 times. Look at that. 4 out of 5 of these trades are in 1-minute candles. Yeah, buy it there, at that next break, after the halt, sell there, goes up, pulls back. Again, this is a really huge candle. You could buy it there at the 4 or at 412, and then sell it there. Let it push up, and let it do this. Let it make this big cup. Just let it, because if it, these are pretty bearish signs that the party could be over, and it could come all the way back down there. And if it did come all the way back there, you're not going to get stuck, in the trade up in here, and it comes falling down. Yes, there are dip buyers that would love to buy at this base here around the $4 range, but I'd rather be in and out of a trade in one candle if I could, right? So it rips up, and it is the biggest cup of them all. This is the same concept as this. Okay, it's the same concept. It's just on a bigger scale. It's a bigger pullback. It's a longer cup. It's a deeper cup. But look at this volume here. Is there any coincidence on the arrow on this one? Look at this is the biggest volume of the day, right? Almost 250,000 shares traded right there. So this becomes your last safe entry, and you can tell it's a little sporadic here. I mean, you're not going to really make this kind of trade, and this is, you don't really want to enter into a trade in here, because it's just by this point is really overextended. You're waiting for a safe entry up, a safe entry up, a safe entry up, a safe entry up, and your first safe entry up. All right, wow, it's a really long video. If you have sat through this entire video, congratulations. I really appreciate it. You can give me a thumbs up if you loved it. You can hit subscribe if you really want to get alerted to these videos as they come out. And if you are not in our chat room yet, come on, join us. It's a 2-week free trial. You got nothing to lose. Just go to willtotrade.com, fill out the form, and we'll get you all set up. Thank you guys so much. Have a great night.